All right, hello, my good friends out there in the trader universe, or anybody out there in the universe in general who just so decided to click on this video and join me for the next few minutes, where I promise I will take a grope in the murkiness and try to make some sense out of the stock market. And I hope whatever I discuss with you guys today leads you to the path of riches. My name is Doug. I am with Trade with Doug, and remember, you can go to tradewithdoug.com for all of your trading needs. Now, before I get started, I want to let you know I put something very special down in the description box. Record month for the part-time trader program. I've been talking about this thing on and off for the last couple of years. 2 to 3 trades a week, all done by email. We got a chat, but it's not that active. Just a really simple program, a really easy program to follow along, just swing trades. If you remember, I did a video a little while ago. I said, I want to become more of a swing trader. I want to start changing the way that I trade. Man, I tell you what, record month. Take a look at this, guys. Some amazing, amazing results. So if you're looking for just a couple of ideas, like I don't want to brag about results. I don't want to talk about that shit all the time. Here's what I want to talk about. If you're just looking for quality ideas, quality research, and quality that you can actually use, actionable stuff that you can get into, not hindsight trading, just actionable stuff, the link is down in the description box. Now, let's get down to the market here. We'll talk about that. I'm going to give you a few other ideas. We'll start here with this market, and it's pretty simple by price action what's happening. We're just undecided, and we're still volatile, and it appears as if we're going to be in this situation for quite some time. The Fed has really backed itself into a corner, in my opinion, because right now where they stand, you either aggressively raise rates to stop inflation, and the market will probably end up dropping, or what you end up doing is just continuing to QE and leaving rates lower, and inflation will run rampant. So it's sort of this juggling act between controlling inflation, keeping us out of a recession, and so on. And maybe the Fed's just done too much here. Maybe they waited too long to make changes. Maybe they kept the QE thing going too long. But whatever it is, it appears as if the market cannot pick a direction. And that's okay, because inside of these volatile markets, you can make a lot of money if you know what you're doing. And I want to say this because you guys out there that are new are experiencing this maybe for the first time. And I don't want you to be afraid of it, because if your real true intentions are to become a successful trader for the long haul, you've got to be able to survive in every market condition. You just can't be good when the market's bullish. Now, if the market stayed bullish forever, which sometimes it feels like it will, then okay. But you can't just pull all cash and sit for 5 or 6 years if that's how long this is going to last. What if we go into a bear market for a couple of years? How will you deal with that? You have to be able to make money universally through all markets, and that's what you need to learn if you truly want to stay and maximize your potential. Now, let me get off of that subject and talk about where do we go from here. Well, the rally was pretty good over the last few days. We pulled back Thursday and Friday, actually got very close to the 200-day moving average here on the daily chart with the SPY. And for now, at least for now, the market held up. I think this is 443 right here. Let's just say 443. So from right now, it has held that level. So to me, going forward, we're just talking about next week, you got to hold 443. If you start trading too much below this, you start getting closes below that, that's not going to be a very good sign. If you're really wanting this thing to become bullish, we're probably going to end up going back down a little lower towards 430. So again, if you don't stay above 443, you start closing around 443. If you get around 443 and you see the lack of interest in buying, then maybe we need to get back down to 430, and we can reassess where we stand if that happens. If it does hold up for a couple of days, there's a chance we can re-challenge this 450 area to 460. Let's just say 455, 460. Somewhere up in there, we can get back to where we were on Wednesday. So right now, your ranges are the highs from Wednesday for bullish activity, the lows from Friday for bearish activity. Those are going to be your two massive pivot points in this market. You start trading above the 455s and 460s, we can make a run to 470 here. And who knows what can happen after that. Maybe there is a run to all-time highs. But then underneath of that, it's still, the tone is going to be bearish. Nonetheless, I don't expect the volatility to stop. If we take a look at the QQQs, a little different picture here. only crested above its 200-day moving average on Wednesday. And now you're back down in here well below that. This one is a little different. I would look at my levels right here, say, let's say 352. I'm just eyeballing these. I don't know if they're exactly just the lows of these 2 days. Just like the SPY, I would say that is your line in the sand for continuation. If the market is able to hold up here and attract buyers here, then maybe we rally back up to the 200-day, which is 366, and then maybe somewhere up here around 378 before the week is over. If not, you're probably going to end up going below this, and just like I mentioned with the SPY, we'll end up probably back down at 340. So to draw this out, you may end up holding this, rallying back up to the 200-day, or failing to really gain traction here and then trading below. Now I would expect one of those two circumstances to happen. I doubt we just go sideways. We're not in that kind of market. So that's my analysis there. Right now, we are more bearish than we are bullish. One of the first things I've ever learned, or quotes I've ever learned in the market, or market adages, whatever you want to call it. Hell, I don't know. Bull markets are not volatile, right? Bull markets are not volatile. If it's volatile, you're not in a bull market. And you're trending a lot lower here, so just remember that. Everything gets condensed, position size is smaller, accuracy better, targets shorter. Take your money while you have it. So let's move on to a few stocks here, both long and short, and build a plan here. I'm going to give you quite a few today. Actually, not quite a few, 5. Etsy. I'm actually looking for a reversal here. Sometimes I wonder why I'm looking for a reversal. This chart is just dead. And when I say a reversal, I'm not buying on the cheap here to invest in this. This is a trade. If we can get above this 134, 135 here, the tops of these 2 days, there could be a quick cash flow move that maybe takes us back to about 160. Just very similar to this move right here that we experienced last week or the week before. Just a nice 2-day parabolic, maybe just a 1-day para. Stop can be very, very tight under 125.37. If I don't see that, I'm not taking this trade. It has to have some, I would prefer a base like Monday, a base on Tuesday, something to really tighten up that base like this. But I don't see that happening in the market right now because of its volatility. I expect you to see something more like this. Maybe a quick bounce off the bottom that just yields a few days of cash. No way, no how would I be swing trading these for the longer term right now. I'm not sold on this. I think many stocks like this, like ZM, like Roku, and others, they were just a benefit of what was going on in the marketplace, and now they're just getting smoked. And who knows, if you missed that, it's probably a better short. But I'm watching it right now. Keep Etsy on the list, see if it does something. I mentioned this one last week, CFVI. I like this one here, and it is really starting to come alive. It's a little bit of a chase here. I'm already in this one. This 1277 is a little bit of a chase, but if you do pull back intraday, I think any move that gets above here towards 13 is going to rally this up towards the 14 area to where we were in January. And who knows, this is a former parabolic. People remember this kind of activity. So I don't want to rule out the fact that we can't make it up to 16 area or 1550s up in here. But one step at a time. You had a really deep pullback on Thursday, but the bullish activity on Friday coming right back and reclaiming that sell-off. I like this one. I really, really like this one. I mentioned it was ascending nicely. Real entry should have been somewhere in here, but if you're not, look for a pullback, 1350, possibly 15, and who knows? We'll see after that if we're fortunate enough to get that. CFVI, I like this one long. I think I've heard this right. INDO, did I write that right? I don't think that's right. Yeah, I did write that right. Okay, I couldn't even look at my own handwriting on here, all sketchy. Okay, I'm iffy about this kind of stuff, but when there's opportunity, I will let the charts decide and take a look at this. Really nice bounce right here. You have two possibilities here. You have a long and then you have a short possibility. You'll pick the sides and maybe do even both of them depending on the way this trade. Ultimately, I'm leaning to short because charts like this are really not long-term charts. Like this is not really what Nvidia looked like when it was $12 and ran to 400, or Facebook, or solid companies. They normally don't give back a lot. These could be pump and dumps. These could just be Momo plays, cheap stocks running. You know, there's always the flavor of the day club for that kind of stuff. Now, if we look at this chart and we see what's happened, you were parabolic back here from 250 to 4. Great para, gave it all back. Okay, it was just like a standard old pump and dump. Now, I'm not saying it's officially a pump and dump, but that sort of thing. Momo strong, everybody's out the door. It's just a trade. You get a really huge, I mean, a ridiculous move from 3 to 9. This thing was probably, I wasn't paying attention this day. It's probably halted 10 times on circuit breakers, but gave up a substantial amount for that and then sold off. So you're in this pattern of up, 100% give back, para, 100% give back, and now you're bouncing again. So there could be, if this rhythm continues, this could be another move back into the 8s. Now it's a bit stretched here. It would have been nice if you had entered this or you're in around the 450s. That's the logical spot for an entry. If you want to long this, and I'm not saying this is my plan, I think if you get a pullback someplace intraday, some number intraday close to the 200 moving average of 450s, 460s, somewhere in that zone, and you see support, then I think this has the chance to maybe re-gear you back into 7. For me, I think I just want to try to the short trade here. And for a short, there's a couple of ways this might play out, if that's what you want to do. One would be a red day or a sort of a rejection day like this, where you get back-to-back tall wicks in the chart. Back-to-back tall wicks here would allow me to place a stop around 550 to 6, controlling my risk, and see if I can't pick it up or cover that at around 350. Now that's an okay trade for me, but I think the RR there is a little out of balance. Actually, what I would like to see is another move that puts you up towards 650 to 7. Then you get that pivot. Same strategy, a couple of wicks, a couple of pullbacks, a couple of bars, something that pivots to give you risk control, then try to collect 350. So I'm leaning to the short, but I'm not going to rule out the possibility that that's the only way to make this trade. You know, even when I look at things short, they could squeeze for several days at a time, so you never want to underestimate that. And who knows, I might change my mind, but possible that there is a long there as well. I wouldn't write that off. ISIG is another cheap one here. This one, I feel I definitely want to look at it as a long. Same kind of hanky-panky chart here. Again, when I say this, it's just this is a piece of crap that all of a sudden gets some Momo. So when I mention these, I'm not investing in any of these companies, guys. This is just a trade, taking advantage of momentum, trying to be a squirrel, getting a nut out there in my piece of the pie. Here's the only trade I'm looking for on this one, and there's nothing else, at least right now. You got a lot of wicks right up here at about 15 bucks. I mean, look at this. 1, 2, 3, 4, 5. So you've had 5 trading sessions out of the last 7 where you've nibbled at 15. So if you can get a close above 15 or a solid push of volume above 15, there's a chance we can pick up 20 to 26, somewhere in this zone right here for a trade. That's a very strong possibility, but you've got to get above 15 to 1550. Otherwise, it does not confirm. It could just roll over and end up back down at 9, which is probably where it'll be in a year. Very similar to this. Take a look at this, and this is what it led to. So kind of the same thing. Now, there's a gap up here on this day. We don't want to chase gap. You do not want to chase gaps ups on this. Your entry points, your entry is and execution is paramount and stuff like this. Watch this one here. Now, if some way it gets up to 24 and gets out of my vision and control and I don't take it, I might look to short it if the setup is there. But right now, that's down the road. That's not possibly, maybe it is this week. We'll see. But watch this one here, looking for a long 1550 to 24. If we miss that, we could take a short at it, but let's just see if it can close. If it doesn't even get up there, no, don't take this trade. Don't take this trade. And the last I'm going to give you for today is hope. Who doesn't want some hope? Remember the video I did, hopers or dopers? Anyway, guys, same thing. Lots of clustered consolidation here. You need a close above 17. Should get you back up to 1768, and then who knows, maybe a little run into 20. Stop can be just right under the base of these bars. But just like the rest of them, you need a confirmation. You need to see it move out of range, because this is what happened last time here. Take a look at this. Once it removed itself outside of that range, you get a nice move. So if you take this move, pile it on top of there, that should take us up to about 20 bucks. Let's say 20 bucks. 20 bucks. Okay? So that's it. I've got Etsy, CFVI, INDO, ISIG, and Hope. A couple longs, a couple shorts. So remember, guys, we're going to be trading through volatility for a little while. This is not going to fix itself probably for the remainder of the month. And if you don't have a definitive edge, don't take the trade. You know, there's like, you know, you're not getting any hero points here for being able to manage the beast that the market can be sometimes. If you need help, make sure you join a live trading community there as well with the part-time trader. I'll do everything I can to share with you how to navigate through this. I think that's what it's more about. It's learning to trade, live the life of a trader, what it really means to be a trader, not those models and bottles kind of stuff. You know, how you conduct yourself, what are you looking for, how you diagnose price action, how you see charts, how you translate these charts. All of that matters. So trade safely. Keep yourself nice and light on your toes, in and out right now, hit and run until we get some clearer signals and the market picks a more definitive direction. Then it's a risk on game, but right now it's risk off, limited shots, and calculated with those shots. So guys, thanks for watching this video. As always, I do appreciate it. Take care, trade well. I will talk to you soon.